Welcome to Factful Finance. Did you know that nearly 1 in 3 homeowners have missed a mortgage payment at some point? It's a shocking statistic, but the good news is there are ways to protect yourself financially in case life throws you a curveball. One of those ways is through Mortgage Payment Protection Insurance, or MPPI. But who exactly is eligible for this type of coverage? That's the question we'll answer today. Before we dive in, just a quick disclaimer. This is for educational purposes only. Listing specific products doesn't imply endorsement. Always consult with a professional for guidance tailored to your situation. Mortgage Payment Protection Insurance is designed to help homeowners keep up with their mortgage payments if they fall ill, become injured, or lose their job. It offers peace of mind knowing that, even in difficult times, your home and financial security are protected. But how do you know if you're eligible for MPPI? First, let's look at the basics. MPPI is available to homeowners who have a mortgage, of course, but eligibility can vary depending on factors like your employment status, age, and the type of policy you're applying for. In most cases, to qualify for MPPI, you must meet the following criteria. 1. Age requirements. You usually need to be between the ages of 18 and 65 to qualify for MPPI. If you're older than that, there may be limited options, but it's worth checking with insurers directly. 2. Employment status. To be eligible for this insurance, you must be employed or self-employed. If you're unemployed, you typically won't qualify, though there are policies that cover involuntary job loss. This is something to keep in mind if you're in a job with unstable conditions. 3. Health condition. MPPI is meant to protect against unexpected health issues, such as accidents or illnesses that prevent you from working. However, if you have a pre-existing condition, be aware that this might affect your eligibility or lead to exclusions on certain aspects of the coverage. Always review policy terms to understand exactly what's covered. 4. Income level. Some providers may require you to prove a minimum income to ensure you're able to meet the financial obligations under the policy. This is particularly true for policies that cover larger loan amounts. Let's take a look at a real-world scenario. Imagine you're Liam, a 35-year-old marketing manager with a young family. You have a solid job, but you recently hurt your back at work, and your doctor advises that you take time off. Your mortgage payment is about $1,200 a month, and you're worried about keeping up with it while you're recovering. With MPPI, you could be covered for a certain period, giving you financial stability while you heal and get back to work. However, if Liam had a pre-existing back issue, he might face exclusions on this specific cause. This is why it's crucial to read the fine print before signing up for any insurance policy. The next thing to consider is the policy terms and waiting periods. Many MPPI policies require a waiting period before the coverage kicks in, usually 30 to 90 days. So if you're thinking about getting this insurance, make sure you have a plan in place to cover expenses during that waiting period. It's also worth mentioning that MPPI typically only covers your mortgage payments and not other living expenses. Some policies may offer add-ons for things like utility bills or council tax, but that's not always the case. Be sure to check the specifics when you're comparing different policies. So to sum it up, if you're employed between the ages of 18 and 65 and in good health, with the exception of any pre-existing conditions that may cause exclusions, you're likely eligible for MPPI. The key is understanding the policy's terms, knowing what is and isn't covered, and ensuring that the protection fits your specific needs. Before we wrap up, here's a practical takeaway. Always shop around. Policies can differ significantly between providers, and some may offer more comprehensive coverage than others. If you're uncertain about which policy is best for you, a financial advisor can help guide you through your options and find one that fits your needs. Thanks so much for watching Factful Finance today. We hope you now feel more confident about whether mortgage payment protection insurance is right for you. We'd love to hear your thoughts. What do you think would be most beneficial for your financial security? Let us know in the comments. If you found this helpful, why not subscribe so you don't miss out on future tips to help you take control of your finances? We think you'll find the video on managing unexpected expenses next really valuable for your financial goals. Until next time, Take care and keep making smart, informed choices about your money.